Hey there, welcome aboard. It's Walter here. Glad to have you here. We're going to talk about trading systems. And I want to be clear here. But oh, by the way, if you enjoy what we're talking about here, you're going to love the Naked Trading class. You can go to nakedtradingclass.com and get 3 ways to grow your account quickly. It's an on-demand trading, so you can watch it at your leisure. And I hope it helps. Now, let's talk about the big lie. The big lie with trading systems is essentially this: what we're told by our brokers and what we're told by, just scouring the internet, going to those free factory forums and things like that, is that the system is key. And let me ask you a question. If the system was actually the key to trading success, wouldn't it be the case that like the first time you found a system on the internet that had a really good track record, that you would be able to make money? Wouldn't that be the case? Now, I don't know about you, but I'm only speaking from experience. It took me over 4 years to crack the code in terms of making money. So a lot of people would give up and start selling, whatever pyramid vitamins or flipping houses or whatever. A lot of people who get into trading, it's just kind of one of those things. But you're probably passionate about trading, and that's my guess, and you probably really love it. So if you're at the point now where you're not quite profitable, maybe break even or something like that, I would encourage you to shift your focus away from systems. Now, systems are important, but really the most important thing about your trading system is that it matches your personality and your beliefs. So I'm not very good at trading like 1-minute charts. I know this because I get a bit nervous, and I don't like the being under the gun. What I like to do is trade like these 8-hour charts I'll share with you right now. These 8-hour charts here, or 12-hour or 2-day charts or 6-hour, whatever. These charts I find to be much easier to trade. The reason why, of course, is that I'm using my planning area of my brain, my frontal lobes. You talked about this in other videos, and I'm not in my reptilian brain. You're in your reptilian brain when you are trading lower time frames. It's kind of like playing the slot machines. It's very similar, in fact. And in fact, your trading system, your trading platforms are set up to look like a slot machine, like an electronic poker machine at Las Vegas or something. And that's done by design. Your brokers will also teach you lots of new indicators and lots of new strategies because they understand that most traders go through the cycle of doom. I've talked about this in the Naked Forex book. The cycle of doom is a real thing. I've been in it for many years. And the fact is, if your trading system was really what made it work, then, like let's look at something outside of trading to prove this point. If understanding business and this business strategy was really all it took to succeed at business, then all you would have to do is read one book from some successful business guy, like the guy who does Virgin, Richard Branson, or Donald Trump's book, or someone's book who's made a big pile of money in business, and just do what they did. The reality is there's other layers of it. And just like trading is the same. If you were to read one trading book that had a viable system, that's not enough. And the reason why is you have to have a system that fits your beliefs, not somebody else's. You must have risk rules that are in place that enable you to avoid the catastrophic drawdown that will make you quit or decide to give up. And you also have your psychology right. Those 3 things are key. And so what I'm going to share with you are a couple of interesting trading systems that may or may not fit with your belief in what the markets are like. And the reason why I'm doing this is because I want to share with you that the focus should be on finding something that works for you, that makes sense to you, and then pour everything else into risk management, position sizing, and psychology. And once you understand this, you will be able to make inroads. I'll give you an example. When I first started getting to break even, I was so excited because then I knew all I had to do is slightly tweak my profit targets or my stops. I knew that somewhere in the risk, I could enable myself to make money using this strategy that I was basically at break even. It was a big shift for me in thinking. And I said, hang on, my winners are covering my losses, but that's about all they're covering. How do I make this better? And I knew it was in the exit rules in my money management. Okay, so let's get into this chart here, and I'll share with you what can, according to this chart, the sellers are in. This is pound. Let me share with you the pound. Okay, yeah, this is the pound 8-hour chart. And if you look at the open position ratios, Let's see here if we can get them. Is the pound on here? No, the pound's not on here. Forget that. That's okay. The numbers, I can tell you the numbers are very bearish. In other words, most retail traders are buying the pound USD as we're recording this and as we see this chart. I'm actually short the pound from up here in this area. And basically, what you want to do if you want to use like a very basic system, I'll give you a couple. Number one is you wait for the market to trend. I like to use open position ratios to see that. And print a box. Once it prints a box in the midst of a trend, and maybe this is a bit early for that, perhaps, you wait for a big candle to get out of the box in the direction of the trend, and then you sell off of that or buy off of that box. So that would be one way to do it. Again, this is the 8-hour chart. On the 4-hour chart, things like this would look like, these are obviously going to be 4 candle boxes here instead of 2 candle boxes. So they're going to be a little bit easier to see. Again, down here, this would be 4 candles down here. And again, you just wait for the market to break outside the box. Stop loss goes on the other side of the box, and you just go. Here's another one right here. We got another box here. Now, I don't know what happened first in this box. I don't know if it first spiked higher and would have stopped you out, or if it first went lower. But the key here is the box has to close outside the box. Or the candle, the trigger candle has to close outside the box. This is also a trendy kangaroo tail, which is why I took this. I took this on the 12-hour, but it's basically the same candle. All right, so that's thing number one. Thing number two is you could wait for the market to come up and touch a significant level for the first time. This is what I call the first touch trade. And so a significant level for me would be here. Let me draw this in here for you. See how we've got a whole bunch of resistance here, support, support, and even touched it on the way through, which is a trade in and of itself. So the next time the market gets up to this level and touches it, that would be a trade. I could simply put a sell stop right on that level or a little bit above it maybe. So my level is drawn at 28.57. What if I put a sell stop at 28.65 and I put a stop loss with 60 pips and I said, look, if it touches there, I'm going to hold on for dear life and see if it'll go down. Sometimes it'll double top and maybe it'll spike you out, but sometimes it'll just hit it and then fall away. That's a little bit, it's more common than it would double top, but the thing is, it depends on which time frame you're looking at. If I'm looking at the daily, it may not double top, but maybe on the 4-hour it does, for example. So the important thing here to get across is that I am not doing anything other than drawing in very significant support and resistance and waiting for the market to approach that level again. That's all I'm doing. That's it. Here's another one. Here's a really good one. What if you simply use the line chart to get into your trade? So you wait for the market to make a bend, a really strong bend, and when it does that, you go in the direction of the bend. Now, you might find that you only want to do this when the open position ratios are in your favor. So you'd only want to take a sell bend when there's over 70% of traders are going long, or you'd only want to make, and that is, I stated that correctly. It is indeed when they're going long, I want to short. Same thing, I want to short, or I want to go long when over 70% are shorting. And that's going to be the case across the board. You'll typically see that. Now, what will happen, of course, is when the market's chopping around like this, you're going to get whipsawed like crazy. That's why I think it makes more sense to pay attention to your open position ratios or whatever trend thing you want to do, whatever thing you want to. So right now, the open position ratios are still bearish for the pound. So if it were to come up here and make a strong bend on this chart, I would just simply put my sell stop below that bearish candle, my buy stop up above the high, and wait for it to trigger. That may happen next week, for example, as we're recording this. That would be a very simple bend trade. Or I could just wait for the first touch here, or any number of things. Another one that makes a lot of sense is sometimes you get these flags. So you can easily draw a trend line, and you wait for the market to break the flag. So we wait for a really strong trend. Let's see if we can find another market, actually. Let's do that. We'll go to Aussie, let's say. Yeah, this is a good one. So I'm going to delete this fib thing because I don't really use them anyway. But where's my fib thing? Get rid of this. Okay, so here's an Aussie 8-hour chart, and again, I'll get these things away. But pull the numbers away. But basically, those are how I see my trades with different colors. red is stop loss and all that. Okay, so what we'll do here is we wait for the market to trend, and then once it does, I just draw a simple trend line, and boom. As soon as it breaks the trend line, if I'm in a downtrend and the numbers are good, as soon as it breaks that trend line, I short, put my stop loss above the apex, the current move, and so forth. Now, in this case, we might be looking at a box here. So this may consolidate for a longer period of time. If that's the case, I would simply wait for it to break out of this box. So I would use that other one we talked about. You know, the reality is you can literally toss a coin and you can make money doing that. It's true. If you don't believe me, do it yourself. Toss a coin, maybe do it in Forex Tester or something like that. But you toss a coin, you take your trades, and you see what happens. What you will notice is that you can make these systems work even by tossing a coin. If you the further you push out your reward risk ratio, the easier it is to make it work. And that doesn't really matter what the signal is. So I hope that this helps. And any questions, go to nakedtradingclass.com if you want to get the free class on growing an account quickly and learn about the trading account that we're growing quickly right now. When my system is at break and moving a stop or tweaking my often unbalance my win ratio. Okay, Eric, great question. I would encourage you to think about this. What if you didn't focus on the win rate? What if you simply focused on expectancy? Okay, go back and look at the other videos we have on trading expectancy. There's a spreadsheet you can get. And by the way, you can click File, download that spreadsheet, or copy, save as in your own Google Sheets or whatever. But the point is, the most common mistake that we make in early on in trading, and I don't know how long you've been trading, is we focus on win rate. What we should be focusing on is how much does the system pay out. That's it. I mean, if your goal is to make money, then we should be focusing on that, right? And so that will always be the case. When you push your reward risk ratio out, your win rate's going to suffer. But what will typically happen, and I've tested this many times, is that I can take the same signal, the same reason to get into a trade, the same entry rules, and I can apply a more aggressive target. And what will typically happen is, yes, the win rate will fall, but the overall profitability goes up. So, for example, I did that recently with a strategy that I shared with some of the traders I work with, and the break even on that would have been a 26 or 25% win rate, and the win rate was 33%. So we were 8% above what we needed, and so we had 8% there that made money, and that was simply because of the 3-to-1 reward risk ratio. So I think that's what you'll find is if you start to play around with the numbers and do your testing, it's okay to see your win rate come down if your overall profitability goes up. And the key is to use that expectancy spreadsheet. So go back and look at some of the videos. If you haven't seen it, maybe you have, and use that and plug the numbers in and see for yourself. The key is to convince yourself, right? I need to convince myself that this is indeed the way to go, is to shift my focus away from winning and more onto pulling profits. And I know that sounds weird, but that's really the key, I think. And hey, man, I've done the same thing. I spent years and years and years trying to make 70% win rate with 1-to-1 reward risk ratio or worse. So that's the key. Okay. I like to use ranges, Hercules, on my support and resistance. I talk about that in the Naked Forex book. Cool. All right. Hey, guys, thanks so much for your time. You can go to nakedtradingclass.com to get more on growing account quickly. I wish you happy trading. We'll see you in another video. Take care. Bye.